Hi everyone, Scott Schweiger here to celebrate the kickoff to everyone's favorite time of year, tax season. With the opening of filing season just yesterday, there's no better time to start Tuesday tax tips back up again. I'm going to try something a little bit different this year by focusing more on issues that businesses may run into instead of individual income tax issues. So, if you're a business owner or you have that side hustle, these are the tips for you. We're diving right in on the heels of December's tax planning crunch, and it's pretty common for clients to ask in December, how much do I have to spend in order to not owe taxes? Or something similar to that. You know who you are. At any rate, no matter the business, it's pretty common to pack expenses into December to help with taxes if you've had a profitable year. And one way to do this, which is pretty common, is to purchase equipment or other expensive fixed assets to take advantage of bonus depreciation and Section 179 expensing. Now, does this really work? Yeah, but you need to keep a close eye on whether you actually place the asset into service for the year. Simply paying for the equipment is not sufficient for depreciation to begin, which means that bonus depreciation and Section 179 expensing are also off the table. So, what does placed in service actually mean? The IRS gives us some guidance stating that an asset is placed into service when it's ready for its assigned function. Leave it to the IRS to be a bit murky, right? Practically speaking, equipment should be installed, available for use, and actually used at least once in order for it to be considered placed into service. So if the equipment has arrived but still boxed up, it's not placed in service. And if it hasn't even arrived yet, you've just paid for it, it's definitely not placed into service. Now, even if you missed that end of the year cutoff for your placed in service date, the total depreciation you get to take on the asset isn't impacted at all. And you can take it the following year along with any accelerated depreciation that you want. So you're not completely out of luck here. The timing of the deduction for this year, or rather last year, just isn't optimal. Obviously, how this tip and the others will impact you depends on your particular set of facts and circumstances, like if you have a business, if you purchase equipment, and the type and timing of what you've purchased. If you have specific questions, please reach out to your tax advisor or feel free to contact me. Thanks so much for watching. I hope you guys join me next week for another Tuesday tax tip.